All right, so we're diving deep today into Wise's 2024 annual report. This one, you sent this over, and it's quite a bit to unpack. But what we really want to do is figure out what their core business insights are, see how their financials are doing,
Yeah.
and get a feel for where they're going in the future.
Yeah.
You mentioned wanting a good overview, but keeping it pretty quick, right?
Yeah, absolutely. Hit the highlights, the stuff that really matters.
Perfect. Okay, so let's jump in. Right off the bat, they lead with this money without borders thing,
Yeah.
low fees, easy to use, fast transfers. That seems to be their big vision.
Yeah, and the report does a pretty good job of showing how they're actually doing that. This past year, fiscal year 2024, they secured a bunch of new licenses, which, for any financial company, that's a big deal.
That keeps the lawyers happy.
Exactly. But then there's this other thing. They set up 5 direct connections to domestic payment systems. That's the kind of behind-the-scenes stuff that can really cut costs and maybe even speed up transfers even more down the road.
Right, so it's not just about paperwork. It's about building a better network.
Yeah.
And are they seeing results from that?
Oh, yeah, for sure. Their Wise account, it's the one for individuals and businesses, saw a huge jump. It's up to like 12.8 million users worldwide. That's a 29% increase from the year before.
Wow, 29%. That's a lot of new people using their service.
Yeah, it is. And on top of that, their transfers are getting faster. 62% of them are instant now.
Instant.
Yeah.
That's got to be a game changer for anyone sending money internationally.
Absolutely. And it goes hand in hand with their whole mission of lower fees. They're laying the groundwork for some fee reductions in FY25.
Okay, so keeping prices competitive is key for them. What else? What else are they doing to expand?
Well, they expanded Wise Assets to 11 countries in the EU, giving users more ways to manage their money across borders. And it's interesting, it's not just about individual customers anymore.
Right, I saw that too. The Wise platform thing.
Yeah, that's a smart move. Basically, they're letting other banks use their international transfer system. It's like they're scaling up without having to do all the work themselves.
So they're becoming the backbone for other institutions. That's pretty clever.
Right.
But at their core, it still seems like their main goal is just to make moving money across borders easier and cheaper.
Right, that's the foundation. And building their own network seems to be working really well. Just look at the results from this year and how much they've grown in the past 3 years.
And the interesting thing is, it's not just about transfers anymore, right?
No, it's not. They're making more and more revenue from features on their account. It's like they're becoming more of a full-fledged financial service.
Like a one-stop shop for people who need to manage money in different currencies.
Yeah, exactly. That kind of diversification is usually a good sign for a business. Makes them more stable in the long run.
Makes sense. And speaking of stability, there were a few leadership changes, right?
Yep. Christo Kerman's back as CEO after his sabbatical last year. And got to give a shout out to Harsh Sinha for holding down the fort as CTO while he was gone.
Absolutely. A smooth transition is always a good sign.
Right. And speaking of transitions, they've got a new CFO coming in, Emmanuel Thomason. He's expected to join in October. And his background is really interesting.
Oh, yeah, he was involved with scaling Delivery Hero, and it sounds like he has a lot of experience with fintech products.
Exactly. So he seems like a great fit for where Wise is heading. They also thanked Kingsley Kemish for acting as interim CFO and Matt Breyer, who's been with them for 8 years, a good long run. So it seems like they're in good hands, leadership-wise.
Definitely. So let's talk about their sustainability efforts, because they made a point to highlight that.
Yeah, they're really aiming to reduce their carbon footprint, focusing on things like travel and who they work with, their suppliers. They're putting money into carbon removal projects, too, £500,000 in FY24.
Okay, so not just offsetting, but actually trying to remove carbon from the atmosphere. That's a pretty proactive approach. And they're still committed to that UN Sustainable Development Goal, right? The one about reducing remittance fees.
Yeah, SDG 10.c. It fits right in with their whole mission of making international transfers more accessible and affordable. They're also putting more focus on helping displaced people with cross-border payments, which is a really important area.
Absolutely. It seems like they're trying to do some good in the world alongside making a profit. But let's be real, their customers are at the heart of everything they do.
For sure. They're all about convenience, serving over 160 countries and dealing with over 40 currencies.
Yeah, that's a huge network.
It is.
Okay.
And they're very upfront about their fees, even doing price comparisons right on their website. It seems like their growth is coming from people actually liking their service and using it more and more.
Well, over 12.8 million customers using it for cross-border transactions last year seems to say something.
Definitely. When people choose a service and stick with it, it means they're doing something right.
All right, now for the fun part. Let's get into the nitty-gritty of their financials.
Yeah, the numbers. So Wise changed how they presented their financial information this year in FY24. They said it was to give a clear picture of their performance and how they're growing over the long term.
Right, more transparency. So what jumped out at me was the underlying profit before tax. It shot up to 241.8 million pounds, a whopping 226% increase compared to the year before.
Whoa, 226%? That's a huge leap.
Yeah, it is. And that translates to a 21% profit margin. Now, this underlying profit thing, it's basically a way to see how well their core business is doing without getting bogged down by fluctuations in interest income.
Gotcha. So it's a more consistent view of their profitability, separate from how they're managing customer funds. Exactly. Now, their reported profit, that's the one that follows IFRS accounting rules, was even higher, 481.4 million pounds. That includes all the interest income and some benefits they paid out to customers. But it's that underlying profit that really shows us how efficient their operations are.
Okay, so two different ways of looking at profit. And what about earnings per share?
Earnings per share doubled to 34.2 pence, which is a good sign. It means their profits are growing on a per share basis. Looking at the balance sheet, their cash and liquid assets are looking really good. They're sitting on 14.5 billion pounds as of March 31st, 2024. That's a 26% increase from the previous year.
14.5 billion. That's a lot of cash.
It is, and a good chunk of that, 13.3 billion, is customer balances, but their own cash reserves have also grown to 1.1 billion pounds, up from 1.7 billion. So they're in a very strong financial position.
That's a good safety net to have. And what about cash flow? Are they actually generating cash?
Oh yeah, their reported free cash flow was 486.6 million pounds. That's the money they have left over after paying for their operations and investments. And their free cash flow conversion rate, get this, it's over 100%.
Over 100%. So they're making even more cash than their profit suggests.
Exactly. That's a very positive sign. It means they're efficient at turning profit into actual cash they can use. And they're putting some of that cash back into lowering prices for their customers.
Right. They mentioned reinvesting their gross profit margin. How does that work financially?
So they're cutting cross-border prices by over 2 basis points going into FY25. And then in the first quarter of FY25, they're planning another price reduction, mainly for higher value transactions on popular routes.
So they're making things cheaper for their users. But how does that impact their bottom line?
Well, it could put some downward pressure on their revenue per transaction, but the idea is that lower prices will attract more customers, and those customers will stick around and use their services more often. It's a long-term play.
It's like they're betting on volume to make up for the lower fees.
Exactly. They're also expecting that second price reduction to be revenue neutral overall, so they're clearly anticipating a lot of growth. Now, on the investment side, they've been spending more on their customer service teams to handle the increasing demand, which makes sense.
Yeah, you can't grow without supporting your customers.
Right. And here's where it gets interesting. They've also invested heavily in teams focused on fighting financial crime, making sure they comply with regulations, and managing risk overall. That's critical for any financial institution, especially one growing as quickly as Wise.
Absolutely. You need to have those safeguards in place.
Mm.
What about their marketing spend?
Marketing was actually pretty flat year over year, about 36.5 million pounds. But their marketing team grew, and they still managed to add a lot of new customers. It looks like their marketing is pretty efficient. They're getting a payback within 6 months on average.
That's a pretty quick return. And are they planning to ramp up their marketing in the future?
Yeah, they mentioned that they're going to increase marketing investment in FY25. Part of that will be brand building in markets like Australia, and they'll also do more performance marketing. Basically, they're going to keep experimenting and see what works best.
Sounds like a smart approach. So they're spending money to grow, but what about their shareholders? Are they seeing any returns?
Well, the report says they haven't paid out any dividends yet. And if you look at the relative importance of spend on pay table, it shows zero distribution to shareholders for both FY23 and FY24.
Okay, so they're not sharing profits directly with shareholders right now.
Right. Their focus is on reinvesting everything back into the business to fuel further growth. They believe that's the best way to create shareholder value in the long run. They're also giving stock to their employees, so everyone has a stake in the company's success.
Makes sense.
Yeah.
And they did have that share buyback authorization from the 2023 AGM. Did they use it?
Nope, they didn't buy back any shares. They even stated that the directors have no plans to use that authorization right now. They said it's just a standard procedure.
So for now, It seems like the main way shareholders are seeing value is through the potential appreciation of their shares as the company grows.
Exactly. They're all about capturing more of that massive global market for international money management. All right, so we've covered a lot of ground here. What's your overall take on Wise moving forward?
Well, they definitely seem to have built a solid business with strong fundamentals. Their growth is impressive, and they're becoming more profitable. Plus, their mission seems to be resonating with customers.
Agreed. And their focus on lowering fees while still investing in their platform and managing risk, that's a powerful combination. They seem well positioned to keep growing.
They also seem very aware of the challenges that come with operating in a global financial landscape, especially with all the regulations and potential risks.
Yeah, they're putting a lot of effort into strengthening their defenses against things like financial crime, regulatory changes, and even geopolitical risks. They're serious about operational resilience. The board is actively involved in making sure they're prepared for different scenarios, and they're even doing stress tests to see how they'd hold up under pressure.
It's good to see that they're taking risk management seriously, and their commitment to sustainability, moving from just offsetting emissions to investing in carbon removal, that's a positive sign too.
Definitely. So, big picture, Wise seems like a company that's not just riding a wave of growth, they're actively shaping their future. This deep dive, I think, has given you a really good insight into where they stand right now and where they're headed. But what are your initial thoughts? What stands out to you?
Honestly, what strikes me is how much they're emphasizing their commitment to making international finance more accessible and affordable for everyone. They're not just talking about it, they're putting their money where their mouth is.
That's a great point. It'll be interesting to see how that plays out in the long run, especially as they navigate this increasingly complex global environment. Their ability to stay true to their mission while also adapting to new challenges, that's going to be key to their success.
Definitely something to keep an eye on.
Absolutely.